We are witnessing absolutely extraordinary developments unfolding in the silver market, the gold market, and precious metal mining stocks. But today, we're going to dig deep into why this is happening, and even more critically, we're going to examine multiple reasons why this momentum can continue, how these trends can sustain themselves moving forward. There is so much happening right now, so many fascinating developments that we need to unpack together. We're going to navigate this together today. Thank you for being here. This journey is only possible because we're doing this as a community. We are moving through some of the most remarkable times in our lifetimes when it comes to precious metals, and we're experiencing it together. Before we dive in, smash that like button right now, drop a comment in the section below, and make sure you're subscribed to this channel because what I'm about to share could change how you view the silver market forever. Are India and China absorbing all the world's available silver? What's happening with COMEX? We've got some absolutely mind-blowing numbers to examine from the paper markets. COMEX and the LBMA, those wonderful institutions that have perhaps unfairly influenced precious metals pricing for years. Oh, and before I forget, we've not only got a forecast calling for $200 silver, but another analyst projecting $185 silver. These are credible voices we need to hear from, and we're going to wrap everything up by discussing the biggest factor that will provide the most significant tailwind for silver prices as we move into the future. Let's get started right now by talking about India and China vacuuming up all the world's silver. What I'm about to share with you is so substantial, I could have dedicated an entire stream to this article alone. This comes from David Jensen on his Substack. He states, the global silver demand vacuum has switched on high. Regional prices, wait until you hear about this, are surging way above the United States. In his analysis, global physical demand for silver is indicating that a material price pullback is not coming at current price levels. Market analyst Michael Lynch has posted a fascinating chart comparing the Indian market in Mumbai, Shanghai Gold Exchange, and New York silver prices. The Indian silver price, which appears as the green line, is actually adjusted down by 6% to reflect the cost of import duties if silver were brought into India. What we're seeing is that physical demand, and this is so important because this is a physically driven rally. Physical demand in India and China are rapidly forcing the silver price well above the $94 price that US silver was trading at yesterday. And we're going to get a current price update as well. But look at this chart. The blue line here represents the United States price. The red line shows the Chinese price. The green line displays the Indian price. But there's significantly more we need to unpack in this analysis. Indian and Chinese market prices for silver are maintaining large and increasing price premiums over the United States. This substantial price differential is having the expected impact on the CME, the COMEX, that fantasy island of paper make-believe. And we've got additional data we're going to examine from COMEX that is absolutely stunning. The silver vaults and stockpiles in New York are declining. I want to add something crucial here. About 4 weeks ago, we discussed how at that point, the price of silver in China and India was very similar to that in the United States. And we declared that we were entering a new pricing regime, and that at that stage, the COMEX price would follow and the LBMA price would more closely track India and China. So the fact that we've got this huge premium now, I believe 100%, what we're going to witness is that COMEX price continuing to climb, and we'll get a current update shortly. Before we continue with these shocking COMEX inventory numbers, hit that like button, comment below with your thoughts on this pricing divergence, and subscribe because the data I'm about to share will blow your mind. But let's discuss the stockpiles. The registered stockpiles. There are two types of inventory at the major paper exchanges: registered and eligible. Eligible doesn't really signify much because most of that silver is owned by ETFs, private holders, and so on. Registered silver is what demands our attention because registered silver is the actual silver used to back up the contracts. Registered stockpiles, which appear as the dark green line, are being rapidly drawn down. Registered stocks are those available to the market. Eligible reflects those merely held in the same New York-Chicago Mercantile Exchange vaults. As you can see, the amount of silver in that registered category is declining significantly. One more critical point: Western mints in Australia, Canada, the United Kingdom, and the United States are unable to maintain silver production at levels required to meet demand and are only producing silver ounce coins, no larger denomination bullion bars. I believe we can also add South Korea to that list, and I've heard reports about Turkey as well. This is happening on a worldwide basis. It is a physically driven rally. Further, a large silver supplier to retail buyers, Costco, we haven't discussed them recently, does have silver available, but it's only available in 4 of its 629 locations in North America. That's less than 1%. It's happening right now all around the world. A physically driven rally. We're experiencing it somewhat in the United States where I am, but you're joining from everywhere across the globe. It's happening. Silver is being repriced. All these voices claiming silver's overbought, maybe they're right. Remember, I'm not providing financial advice. I don't have a crystal ball. But in my opinion, the people saying silver's overbought are wrong. Silver's not overbought. Silver is simply being repriced to an accurate level. Silver is the beach ball that had been held underwater, and now it is finally being released, and we're experiencing it together. It's absolutely remarkable. China and India are taking over the pricing mechanism for silver. You Let's discuss the COMEX drain and some really fascinating developments. We have data showing 4.2 million ounces were removed from COMEX silver vaults on Tuesday. 3.7 million ounces, remember that number, 3.7 million ounces adjusted out of COMEX registered. Remember, the registered is the actual physical silver backing up all those paper contracts. Total COMEX registered silver was down 3.72 million ounces to 116 million ounces. I want you to consider two very interesting calculations. Think about the mining sector. The entire global silver mining sector produces 800 million ounces per year. If you divide 800 million by 365 days, that means on a daily basis, the world produces 2.2 million new ounces of silver. COMEX drained almost twice as much in one single day. It's astounding what is occurring. The demand for physical silver is extraordinary, but it gets even more remarkable. If you think about that, the entire mining sector on a daily basis produces 2.2 million ounces. Yesterday, the silver market traded 745 million paper ounces. Think about that. The world produced 2.2 million ounces of silver, but on the paper market, they traded 745 million ounces. And here's another data point. We've had 4 straight days of zero deliveries, and the paper market has traded around 4 billion ounces over the last 4 days. The paper market traded 4 billion ounces and had 0 deliveries. Probably nothing significant happening here, right? It's astounding no matter how you analyze these numbers. The inventory, the registered inventory level showed what? 116 million ounces. That's the total inventory available. Out of all the silver being traded, it's astounding, and it's happening everywhere. This is crucial information, so smash that like button, leave a comment with your price predictions, and subscribe, because we're about to reveal some major analyst forecasts that sound crazy, but might actually be conservative. Our data shows that yesterday on the Shanghai Gold Exchange, which is the physical market in China, silver traded at a significant premium, around $14 to $15 over COMEX, near $95. The argument can be strongly made that this is the new physical price of silver. Those institutions at COMEX and the LBMA are going to get dragged along and figure out what exactly is happening. Next, we're going to examine something I think is really significant that we need to recognize as a major development happening right now in both the gold and silver markets. Let me show you the current price. This is the spot market, which is the physical market for silver. Kind of, sort of. Silver's up $3 today at 96. Can you believe it? $96 for silver. It's a beautiful development. Let's look at the futures market. The futures market should be higher than 96.35, which it is slightly. We're in a slight state of contango. What I want to show you is this 1-year chart of the silver price. Let's take a step back and recognize something remarkable. Right now, the silver price is $96.53. That's the March futures contract price. 1 year ago, we were down here at around $30 per ounce. A little over $30 per ounce 1 year ago. We have much for which to be grateful. While we're at it, let's check what gold is doing. $4,912 right now in the gold market. So much is happening. We're going to discuss next one analyst calling for $185 silver and somebody else projecting $200 silver. Before we do that, I want to point out something very interesting, and there's a significant reason why on a daily basis it feels like we're seeing this more and more. Mainstream media is waking up to the fact that there is an unbelievable occurrence happening right now in the world of precious metals, silver, and gold. More and more influential voices, maybe not the biggest mainstream media yet, although they're starting with CNBC and Fox News and those outlets, but that level below, where more people and many younger people are getting their information, are discussing silver and gold. The latest example is from Redacted. Redacted is an extremely popular channel. Their social media presence alone has almost 250,000 followers. Let's watch briefly as they discuss what is happening right now in silver. The key takeaway here is this commentator is not someone who regularly discusses precious metals, yet more and more of these voices are beginning to talk about precious metals, and it will bring a wave of new participants into the market. It's growing. Do you feel it? We went through the valley of despair in the precious metals market for many of us, decades. But this is different. What is happening right now is fundamentally different. Major voices are talking about gold and silver. And look at the reach. This channel has 2.85 million subscribers on one platform alone. 3 million people being reached on a very regular basis. It's getting remarkable. Next, let's discuss $185 silver. For that, we're going to examine commentary from a Swiss expert. His name is Jochen Steiger. He's been around forever. If you've been involved in gold and silver, you've seen him. You know who he is. He's reliable, trustworthy, and knowledgeable. He breaks down the end of paper price manipulation. In a revealing interview, Swiss commodity analyst Jochen Steiger dissects the seismic power shift in the silver market. The old rules are over, and he provides a price forecast. Let me paraphrase his key points. The physical world has taken over price control, and Asia is leading the charge. The old days when London and COMEX dictated everything are becoming history. Right now, Shanghai trades at a clear premium, around $15 per ounce versus COMEX near $95, proving real buyers, especially in Asia, are calling the shots. COMEX is fundamentally broken. New contracts are cash settled only. No delivery possible. It's pure speculation with leverage at 300 paper ounces to every physical one. They've warned for years this can't end well, and now it's unfolding. We're deep in a structural deficit, 110 to 300 200 million ounces short in 2024. Experts see deficits continuing for the next 5 to 10 years. Mines can't ramp up fast enough. Industry is scrambling, even paying 20% over spot for long-term supply. His updated target, silver hitting $185 within 12 to 18 months, stepping up through 111, 146, then going parabolic. Gold could reach $5,000 to $6,000 soon, even $10,000 plus this decade. Before we hear what another major voice is predicting for silver, hit that like button, comment your thoughts on these targets, and subscribe because we're about to discuss the biggest factor supporting silver's future rise. The shift is real. The momentum is building. We are in a new paradigm when it comes to silver and gold pricing. Next, let's examine what Robert Kiyosaki is saying, the author of Rich Dad, Poor Dad. We've got some interesting content, and then we're going to discuss the biggest factor that will provide massive tailwinds in this new silver environment. Robert Kiyosaki discusses why silver is superior. Gold and silver have been money for thousands of years, but in today's technology age, silver is elevated into an economic structural metal. Think about that. Silver is not only a monetary metal, a holder of value. As we know, it's also this extraordinary industrial metal, much like iron was the structural metal of the industrial age. In 1990, silver was $5 an ounce. Today, in 2026, silver is now closer to $95 an ounce and growing more vital as the structural metal of the world's economic future, a store of value, and as money. He's calling for silver to hit $200 an ounce in 2026. So we have Jochen telling us we could see $185 silver within 12 to 18 months. We have Robert Kiyosaki, author of Rich Dad, Poor Dad, extremely wealthy, highly respected, telling us we could reach $200 this year. Yes, that would be 2026. It's getting absolutely remarkable out there. Now, it's time to get serious and discuss this major factor that's going to provide support for the silver price moving forward. I think this is one of the most compelling visuals about what is happening right now on a macro level with silver, one of several major factors that will provide support for the silver price as we move into the next 10 to 15 years. We want to consider a long-term horizon when we examine this. This comes from Marin Katusa. He's someone who's been involved for a long time in the precious metal sector and someone whose analysis I've always valued highly. He states, the missing piece in silver, silver drilling is rising, but discovery isn't. Drilling activity has jumped 36% in 2025 as prices improved. Yet total drill holes, successful drill holes, remain 26% below the 2021 peak. Most programs are infill drilling, meaning they're confirming previous drill holes, ensuring accuracy and confirming deposits are there. They aren't searching for new silver. These are infill and step outs, meaning they'll step out slightly from a known deposit in known deposits, not new systems. But look at this data. Global silver drilling activity shows a concerning trend. Look at all the drill holes. That's the gray line. There is still a downward trend from 2021 through 2025. But that's not the critical part. The critical part is the yellow section, which represents drill holes with significant intervals. That means drill holes that found large amounts of silver. Back in 2021, you can see the size of those findings, but if you look at the last 3 years, they aren't finding significant silver. That's important on two levels. Number one, all the easy silver has already been discovered. The same is said about copper and really the same about gold as well. All the easy deposits have already been found. But what that chart shows us is really a glimpse into the future. It takes at least 7 years at minimum from the time they discover silver to the time when it's actually mined out of the ground. Think about that. And realistically, the timeline is more like 10 years, 15 years. Some analysts even say 20 years to build, permit, go through that entire process and finance a new mine. So what we just examined is the future supply of silver. And where does silver come from? Yes, some can be recycled, and yes, probably more will be with this higher price, but it's very difficult to recycle silver. All the people who had grandmother's silverware, some old silver jewelry, most of those people already traded in their silver. But the biggest source of future silver can only really come from one place. It's not going to come from an asteroid. I'll admit I'm wrong if in 10 years we're getting silver from asteroids. No, it's going to come from that chart we just examined, which is current silver exploration and development, which is showing us in no uncertain terms that huge amounts of silver are not being discovered. There were so few discoveries because the price of silver was kept superseded for so long, it did not make economic sense for companies to raise capital and explore. Only the visionaries, people who actually discovered, explored, and built silver mines, these individuals were few and far between. Real visionaries. We are alive and living through a period of time for precious metals that none of us have ever experienced before. The geopolitical changes occurring right now in our world, the financial uncertainty globally, the debt spiral that the whole world and definitely the United States is experiencing will provide just an unbelievable support mechanism for these metals moving forward. Thank you for being here. Thanks for being you. Thanks for engaging. Thanks for subscribing. Thanks for everything, and I'll see you next time.